We are very, very excited for this panel discussion. We talked about 2020 and we talked about, what are some of the major themes. And so we have a potential election, we have the Olympics in Japan, we have the trade wars with China going on at this point. We have a potential impeachment as we speak, and not to be taken lightly, you throw in, we now have the coronavirus. So all of those said, it's going to be a very, very interesting 2020.
We witnessed in the last 2 years a tremendous drop-off in business from China. We have a very heavy China practice and a lot of business coming from China and going to China. Under the Phase 1 deal, China has agreed to purchase an additional $200 billion of American manufactured goods and services over the next 2 years. Now this is over the 2017 level. But I think that's gonna have a much bigger impact, frankly, and that could help jumpstart the economy, I think.
Bubbles is what gives us pause. Corporate debt is at an all-time high. It's 50% higher than levels in 2008. The high-yield bond market, record high issuances of Cov Light issuance, which indicates a slackening of lending standards. There's $1.5 trillion in student loan debt, and delinquencies are increasing.
I think there is a recognition in the system, say grow at all cost doesn't work anymore. At least if you want to generate liquidity through the public markets are looking at unit economics and gross margins, and most importantly, improvement in unit economics, and hopefully you'll have 2 quarters of profitability. And so suddenly public markets telling private markets, say, hey guys, unless you fix it on the private side, you will not be able to get any liquidity.
We still see global growth, but not at the rates that we've seen in the past couple of years. But what's the wild card? Well, we can talk about the coronavirus, and we can see the impact that it might have in China. Some people are now expecting China's GDP to come in around 5% rather than 6%. So there could be some kind of trickle down, but I'll remind all of you that the most important factor in both the global GDP and the US GDP is you.